My name is Lincoln Schreiner. I'm a partner with PricewaterhouseCoopers in Canada. Joining me today is the Honourable John Manley, former Deputy Prime Minister of Canada and the current President and CEO of the Canadian Council of Chief Executives. Thank you for joining us today, Mr. Manley.
My pleasure.
Tell us about the Canadian Council of Chief Executives and your role as President and CEO.
So our council is essentially 150 CEOs of Canada's largest companies. Our tagline, as I put it, is that our CEOs manage about $6 trillion in assets. They would have annual revenues of about $850 billion, and they employ about 1.5 million Canadians. We try to spend a lot of our time dealing with issues of public policy. We do a certain amount of public advocacy, and I like to think that we're thought leaders on issues related to the economy and to business.
How does the CEO Council get involved in helping shape Canadian tax policy?
It's one of our major files, and the Council has been engaged on tax policy going back to its earliest days in the early 1980s. It's obviously an essential component of how competitive Canada's economy is, how attractive it is to investment, and how successful we are at engaging the corporate sector in reinvestment in their businesses, in creation of jobs, and in R&D.
What are your views on the Canadian tax system today, and what are the CEO Council's major tax priorities?
It's actually, when you look at it in relative terms across the spectrum internationally, the Canadian tax regime is not bad. And in fact, I think in its analysis, PwC has ranked it certainly in the top 10, one of the best in the world. I think that we have a great advantage in it being predictable, run by a competent agency. Not everybody always agrees with what it does, but we have processes and procedures that are reliable when we want to appeal decisions of the taxing agency. What we have found, though, is that it is really very complex. And as we talk to our members about what they have to do in order to comply, how many people they have to employ on their staff to fulfill the requirements of the taxing agencies, we've been advocating very strongly for an overhaul of our business taxation system, looking to how we can broaden the base, reduce the number of preferences, simplify it, and make it easier for compliance purposes.
In Canada, there is a growing controversy about the amount of taxes paid or not paid by large businesses. Are Canadian companies not paying their fair share of tax?
A fair share is always one of those, squishy words that it depends on which side you're sitting on. When I was Minister of Finance, I always needed the revenue, so we were encouraging more income to come in because governments need it. And when I'm advising corporations, we're looking for ways to minimize the amount of tax we're paying. But I think everyone in Canada's, certainly among our membership, recognizes the importance of paying an appropriate level of taxation. Corporations do consume the benefits of government. They rely on government for a range of things, everything from infrastructure to maintenance of order and in society, to support for research and development, for support for exports, and so on. So we're consumers of government services. The corporate sector should be contributors to government expense. What's fair? I think when we look at corporate income tax, for example, in Canada and compare it to the rest of the OECD, we're around the midpoint. We're not unduly low, we're not unduly high. With your help, as we've begun to get an idea of what the total tax contribution is, again, it's higher, of course, than income taxes. It includes more base to it, but it's still in that range of being not particularly low, but also it's a burden that's capable of being borne.
In 2014, the CEO Council released a comprehensive tax study about all of the taxes paid by Canadian corporations. What was the purpose of this study?
Really what we were trying to do with PwC's help is to get a good understanding of how many points of taxation there actually are that are paid by a company, and what the level of the burden is, and really provide ourselves as a business association, but also our members, with a narrative around what their contribution is to the cost of doing government in Canada. And I think it was very revealing. We I think cut it off at about 30 points of taxation. So yes, there's corporate income tax, but that's only one piece of the puzzle. There's everything from municipal fees and property taxes, various kinds of levies and fees that are paid by corporations in all parts of Canada, and varying depending on the sector that they may be in. So when you add all of that up, you get a very remarkable level of contribution, and quite a remarkable level of complexity required to comply.
Can you share with us an overview of what some of the key findings of the study produced?
I'll start by saying that the level of participation among our members was reasonably high. Interestingly, as we prepare to do it again another year, we're getting a lot more members that saw the value of it last year and are anxious to participate this year. So we'll get an even fuller description of what the Canadian corporate tax contribution has been. We discovered that there's quite a large employment base among the companies that completed the survey. They provided employment to about 800,000 Canadians, who they paid on average about $65,000 each per year, which is significantly higher than the average income or the median income that's paid to Canadians generally. And they collected from them, on behalf of government, for remittance, more than $22,000 per employee. So also a significant contribution to the federal tax base. In total, we found that the total tax contribution of these 63 companies, so a subset of our membership, which in turn is a subset of large business in Canada, over $40 billion in total tax contribution. Of that, $19 billion was the amount of tax that was borne by those corporations, paid by them, and over $21 billion the amount of tax collected by them on behalf of government. So the way that breaks down, to simplify it, is that 38% of every dollar earned is going to government at some level. It might be local, it might be federal, it might be provincial, it might be taxes, it might be fees, it might be other things. 29% of that goes to employees. 33% is retained by the corporations, either for their shareholders and then paid out as dividends, or perhaps as share buybacks, or reinvested in the company itself.
What do you think about the growing trend of greater tax transparency by corporations?
Well, I think that we've all got the understanding now that this is an important part of the narrative, if you like, that companies need to tell in order to make sure that the communities in which they are located, their employees, their customers or clients, and their suppliers all understand what the role is that they play. We've had in a few election campaigns a pretty vigorous debate around corporate income tax, and that's a very simplistic reference point when you look at this total universe of over 30 points of taxation. But it's one that everyone understands. It's easy to compare, and I just think that we've discovered that really is only a portion of the story. If you really want to compare how is this jurisdiction doing as a competitor to that jurisdiction, you can, of course, compare corporate income tax rates, but there's actually so much more to take into account to determine really what your competitiveness level is. And that includes the rest of that story around tax contribution.
Thank you for coming in to talk to us today, Mr. Manley. For more information about the Canadian Council of Chief Executives and the work that this organization does to voice and shape public policy, I invite you to go to their webpage, www.ceocouncil.ca. Thank you.